This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news financial market traders are bracing for volatility over the US election counting period. But elsewhere, global manufacturing remains subdued as new orders intakes contract for a fourth consecutive month. The global factory PMI is dominated by large countries, especially the US and China. But at the positive end are healthy expansions in India, Spain and Brazil. At the other end, however, is the Eurozone, Turkey and Australia. New Zealand would be too, if it was included in these benchmark surveys. New orders for manufactured goods in the US fell by 0.5% in September from the previous month, extending the revised 0.8% decline in August, and loosely in line with market expectations of a 0.4% drop. They rose if you exclude aircraft, however. Year on year, this retreat is 2.1%, but if you exclude defence orders, there was a fall in private sector orders of 3.2% year on year. There was a popular US Treasury 3-year bond auction earlier this morning where the median yield came in at 4.09%. But despite high demand, that was 27 basis points higher than the 3.82% median yield at the prior equivalent event a month ago. In China, banks are foreclosing on a growing number of apartments after homeowners could not pay their mortgages, as the country's housing crash threatens the financial system, and the surge is overwhelming their legal system in some places. Bank balance sheets are being weakened by the trend. But maybe this will pass soon. Their housing market got a year-on-year growth in October for the first time since February, after a raft of recently introduced supporting measures, according to the latest data released by their Ministry of Housing and Urban Rural Development. Sales of newly built and pre-owned homes climbed 3.9% in October from the same period a year ago, they said. India's factory sector came in with an improvement in performance in October, with their PMI rising marginally and regaining momentum. Output growth rose, fueled by faster increases in total new orders and especially export orders. In Europe, their factory sector remains in a deflationary funk, but at least it isn't getting worse. As measured by the overall Eurozone PMI, October brought a lesser retreat. There is expansion going on in Spain, Greece and Ireland, but Germany, France and Italy are all contracting, even if less so. In Australia, the Melbourne Institute monthly inflation gauge reported a rise in both monthly and annual inflation during October. The monthly rise, 0.4%, was the most since July, but the annual rise, 2.1%, is still within the RBA's desired range. The monthly and annual cost of living also rose across selected household types. Later today, the RBA will review its cash rate target. Almost everyone expects them to hold that rate unchanged at 4.35%. And the US Treasury 10-year yield is now just on 4.33% and down 4 basis points from this time yesterday in fairly volatile shifts. The price of gold will start today at $2,733 an ounce and down $3 from yesterday and still well off its high. And oil prices are up almost $2. It's $71.50 a barrel in the US, while the international Brent price is now $74.50 a barrel. And the Kiwi dollar starts today at 59.8 US cents and up 20 basis points from this time yesterday. Against the Aussie, we're down 10 basis points at 90.8 Australian cents. Against the euro, we're also down 10 basis points at 54.9 euro cents. That all means our trade-weighted index starts today at just under 68.7 and marginally softer from yesterday at this time. And the Bitcoin price starts today at $67,740 and down 0.6% from yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.3%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.